Good afternoon, Sifters. It is the week of November 17th, 2025. I'm Tyler Sherven with my co-host CJ Gettelfinger, and welcome to today's installment of the Weekly Sift Stack.
Tyler, really excited for this episode today. We got a lot of great content again. Government reopened up last week, so we'll definitely make sure to dive into that. Unfortunately, there are no more pennies going to be in circulation from the mint, so obviously got to talk about that. And then lastly, everyone's favorite, the largest company in the world, we're going to make sure to dive into NVIDIA this week for the stock of the week. So really looking forward to it. Tyler, I'm going to pass it back over to you. Let's see how the market's been performing.
All right, let's roll into it. So looking at the index tracker year to date as of close market November 14th, 2025, we're seeing the S&P 500 up 15.77%. We obviously saw some turbulence with the government shutdown and such, but we're still on a positive track with the S&P 500 this year. Now, looking at the Bloomberg U.S. Aggregate Bond Index, we're seeing it up 6.57%. Now, there's a little bit more detail with that. There's been an increasing unease at the possibility of that 25 basis point rate cut for the upcoming December meeting with the Federal Reserve. This has led to increasing yields in the bond market over the past week. I'm sure you've all been seeing that with the 10-year Treasury yield, and that's of course been impacting the Bloomberg U.S. Aggregate Bond Index, which has slipped in value recently. So the with now what looked like to be a done deal come December for this Fed rate cut, the market has actually slashed those odds from 80% plus to down to 50%. So just a coin toss, just a penny toss. And this is according to the Yahoo Finance as well. Now, also, where this is also impacting is Bitcoin. Now, I know a lot of the cryptocurrency czars out there are taking a very close eye at Bitcoin and other cryptocurrency. Bitcoin is now only up 1.71% year to date. It fell over 6% over the past week in light of this more hawkish Fed talk. And we typically see Bitcoin and other crypto assets, they tend to respond a bit more negatively to bad news than the general market. So just to keep your eye out there.
Tyler, man, I think I'm going to have to agree exactly, too, with that rate cut tone. If you would have asked me about 2 months ago, I was probably, again, on the edge of his almost locked in, guaranteed. But I agree perfectly. I think it is a penny toss at this point, that copper 50-50.
Yeah, I know. It's buckle up. We'll see what happens.
We definitely will. Well, let's slide right into the most popular company over the past few years as we've been riding this AI bubble. And let's dive a little bit deeper into NVIDIA. So, Tyler, quick question for you. Have you ever heard of AI?
Come to think of it, I think I have. I think I may have come across it today.
It's trendy. Yeah, it's trendy. I'm not talking about Allen Iverson. I'm talking about artificial intelligence. But all jokes aside, what I wanted to do for this next minute is kind of actually give a breakdown about NVIDIA, because I know a lot of people may hear NVIDIA, hear it on the news, hear it about in the markets, but what does it actually do? What's a semiconductor? What's a GPU?
I want to know.
Exactly. So, right, if you're going to be investing, it's good to know what your company is actually doing. So NVIDIA is the leader in their specially designed and production of GPUs. What are GPUs? GPUs are graphic processing units. These GPUs are, in fact, what you think of when you hear the word a semiconductor or a chip. And so NVIDIA started off a high-demand processor for these high-demand gaming computers, actually, is where they started, for these high-demand gaming computers. And let me take a quick pause right here, Tyler. Can you remember, back in the day when you would boot up the old computer, it was about this thick.
Oh, yeah.
And it weighed 1,000 pounds, and you try to play your favorite game, and all of a sudden it sounds like you're at the airport, twin turbo jets taking off.
I got a couple burns in my thigh that are still there from those old time laptops.
Exactly. I mean, it heats up. It's about to melt through your pants, and right, that's what you have to think of. These old chips, these old processors, they just couldn't handle that type of stuff at the time.
No way.
Well, that's where NVIDIA really started to step in. When you think about all these high-demand gaming processors, that's where NVIDIA started, and now they've obviously started to segue into what we're seeing with AI. So the segue is because AI is so high demand. These large language models take so much computing, so much processing power that the need for these chips is astronomical. They have to be the top of the line. They just have to continue getting better and better so they can handle the processing power more and more. And that's really where NVIDIA has stepped in and started to take over. Right? It takes a lot of power and processing, and so NVIDIA started in the gaming realm, and now you've seen that switch to AI. So with that, that's kind of just a quick breakdown is what we wanted to do to kind of explain to your listeners what NVIDIA does, why they've really had this surge is because what they produce, their GPUs are able to handle AI better than a lot of their competition. And if you want AI, if you want the growth that it's projecting, you've got to start at the core, and that core is probably a GPU chip from NVIDIA. So now that we kind of have that on the back burner, let's look at NVIDIA. Let's take a little bit deeper dive and see why they've grown, why they've had such astronomical numbers. So, Tyler, you want to explain to everybody, for those who don't know, what the Magnificent Seven are?
Magnificent Seven. So, Magnificent Seven, these are the 7 biggest companies that we see in the S&P 500. I'm sure that a lot of you are familiar with the names. Apple, Microsoft, and of course, NVIDIA is there. These have been the 7 companies that have been primarily driving the growth that we've seen in the stock market over the past 5 or so years. So we just want to make sure everybody is pretty well familiar with that. CJ, I'll let you take it away with what they're looking to spend here.
And so when you look at those Mag 7, those largest companies, one of them being Meta, which we talked about last week, they are forecasted to spend over $400 billion on artificial intelligence capital expenditures through the end of 25 and into 2026. So those are just absurd numbers for 7 companies, right? What is that? Around 60,000 almost $60 billion for each of those companies to be spending on AI growth for the next year. And let's not stop it there. Those capital expenditures are forecast to grow in estimates upwards of 40% per year going into 2030. Wow. And if you compound that out, that heightened level of spending has even seen estimates for AI infrastructure reach over $2 trillion per year come 2030.
We're getting to federal budget levels there.
We are. We absolutely are. And so that is really why we see NVIDIA just continuing to be the talk of the town, continuing to just control a lot of the market itself. But let's take a shift back and look at the fundamentals. And first off, like we talked about a few weeks ago, let's look at NVIDIA's moat. And Tyler, you want to take a step back again and kind of explain that moat for those listeners who are unaware?
So a moat, you guys may have come across this before with some of the Warren Buffett language. Typically, through fundamental analysis, we're trying to see companies that have a moat. Think about it like a castle, right? It has its moat, its protection for that growth within the castle, right? Now, what we prefer to see are companies with an extreme competitive advantage that will last for 20 plus years, and they can keep building on that incredibly long growth. So typically what we want is like a wide moat. Sometimes we'll even take a peek at companies with a narrow moat. Totally up to discretion, right, CJ?
Yep. But when we think about that wide moat, like you said perfectly, we want that protection, that long-term protection. And so NVIDIA's got 2 characteristics that really lead to that long-term protection. First is they just have the best of the best hardware, right? What's referred to across all the clienteles in the industry as the best processing units, the best GPUs, that is going to give them that wide moat. Because if you want to be able to hit the needs of AI demands, you're going to need that best GPU to be able to process it. And then lastly, they've got elevated switching costs. So training large language models is a very tough task to do. You have to code it, you have to tell it what to do, what not to do, and you have to essentially train and teach
Hard
AI.
enough to learn on my own there, you know?
Exactly, let alone trying to teach it. So NVIDIA's training model, CUDA, is actually also referred to as the top of the line. And so high switching costs for that, because once you get the large language model attached to CUDA, it's very hard to switch off of it. So those couple of things really contribute to NVIDIA's moat, giving them that long-term protection because they have really high, amazing chips that are in high demand. And then also they have really good high switching costs to keep those customers continuing to use and come back to NVIDIA. Now, again, I always hate to play the bear, but let's play the bear for just a second. So one of NVIDIA's best things over the past few years is its customer base. Its customer base is amongst the masses, right? It's Meta, it's Apple, it's Microsoft, it's all these huge companies that you're aware of. But playing the bear on that is that same clientele is also slowly becoming some of its main competition, because they're starting to try to create their own in-house chips to diversify away from NVIDIA, save themselves on some of those costs, save themselves on higher switching costs, give themselves higher margin in the long run.
Hey, are you playing the bear right now? Because you may have saw one this past weekend.
I did. That's a good segue right there. Well, I wish we could throw. Can we throw a picture up? We'll try and throw a picture up on the screen. We got to get the picture up. Yeah. So was out fishing this weekend and stumbled across the largest black bear I've ever seen. It was pretty cool.
CJ is actually a bear enthusiast. I myself am not.
Whenever I'm out in the Smoky Mountains, I always end up running into him. But let's finish it off. Let's finish it off on some hot topic right here. So NVIDIA is set to announce earnings after market close on Wednesday of this week, November 19th. There's a few things we want to mention and be on the lookout for those earnings. So first off, let's break down the earnings per share. That's going to be a very important one to look at, because a lot of this AI demand, a lot of this AI quote bubble talk is going to be based off of earnings continuing to beat estimates. So the first actual thing to dive into is going to be those projections. NVIDIA is projecting earnings per share of $1.22 per share. That is a 29.8% increase from last quarter, from Q2 of 25. So a 30% quarter increase is very large. Secondly, the increase is 74.3% year over year. So looking at Q3 of 24 versus Q3 of 25, we're looking at almost a 75% increase in earnings expectations. So that's aggressive growth for anyone, let alone the already largest company in the world. So definitely keep your eye on those earnings. And then lastly, just listen. I would listen to the call, and I would listen closely to a lot of the specifics. I would listen to the specifics on the data center revenue. Right, this is the core of that AI chip growth. I would listen for the margins. You want to make sure that those gross margins are continuing to grow and not starting to contract, because this is going to, one, validate that moat, and secondly, it's going to validate if there's any pricing pressure. If there's pricing pressure, you could see some of those margins starting to contract, where some of those competition are making their own chips and NVIDIA is having to low prices a little bit. And then lastly, I would keep an eye on the demand for the Blackwell chips. This is their newest chip. And Tyler, I think we'll segue into this in a minute, but those chips, apparently they don't depreciate for 5 to 6 years.
Appreciate you, CJ. Now I know what to look out for that earnings call. I'll be on the peak out for that. Alrighty, so now jumping into weekly insight. So I'm sure all of us out there, a lot of us are relieved. Government shutdown is over. The longest coffee break in Washington. So longest shutdown ever, just wrapped up. But the most important news of all, pennies. Where are they going? What happened? It is the coin that cost more than it's worth. The U.S. penny is the fiscal equivalent of keeping that t-shirt you never wear, sentimental, pointless, and costing you money. It costs more than a penny, than 1 cent, right, to make a penny. And most of them, they go straight from the cash registers into jars, in between seats, wherever, who knows, and they never reappear, never come back. So the story of that copper coin ended this past November 12th with its last minting in Philly. So some facts on the penny. Some fun facts in the penny. It witnessed the first U.S. president. It witnessed slavery and its end with the Civil War. It witnessed the Great Depression and World War II. But most importantly, and after 233 years on this planet, it has never witnessed a Bills Super Bowl win. Tragic.
That is tragic. But hey, that's some good correlation for you, Tyler. 0 for 233. The year it goes out, maybe this could be the year. I think Josh Allen, I think he can get it done.
I think that this is a very good omen for all of us Buffalo Bills fans.
If they win, they're going to have to get some shirts, the year of the penny.
Yeah, fun facts for you, CJ.
Okay, let's hear it.
So, when do you think Abraham Lincoln first appeared on the penny?
Oh gosh, this is going to be a bad one. I know we had I don't know. Is he on wheat pennies? I'm not sure if he's on wheat pennies or not. I don't think he was. So I'm gonna go with maybe like 1930.
So believe it or not, he did appear on the wheat penny,
Oh,
starting
okay.
in 1909.
Okay. Hey, I wasn't too
You were
far
pretty
off.
close. Now, can you take a guess at what image was on the penny before Abraham Lincoln? And there were, to give you
Oh,
a
I
hint, there
have
were
I have
various
no idea.
various images. There were various images.
I'm not even gonna guess on this one. I'm gonna just let you give
That's
that
all
answer.
right. So the one just previous to Abraham Lincoln was a flying eagle. So
Oh, that actually would have been my guess.
yeah,
Darn. That really would have been
there were
my
a
guess.
lot of
Dang.
different things. A lot of different things. But that's a wrap on the penny. RIP. Well, hey, next up, CJ, we got Michael Burry, the forever alarm bell of Wall Street. I know you talked about bears earlier, but
Yep.
nobody's been more bearish than this guy.
Exactly, man. If he was a bear, he's a grizzly bear, right?
He's a grizzly bear, and I'm never getting away from him. Nobody's getting away from this guy, right? I'm sure you guys have all seen him on the big screen. Shout out to Christian Bale performing the great Michael
Absolutely.
Burry. So Michael Burry is back with another warning because, of course, he is famous for calling the housing crash. He is now sounding alarms on market froth, leverage, or whatever risk Wall Street is ignoring this time. As we all know, he's not always right, but he does play an important role. The guy who forces everyone to double check the smoke alarms when the markets get a little bit too comfortable. So Michael Burry is also calling AI the next bubble. Who could guess on that one? But and backing it up by buying millions of puts on Palantir and CJ. I'm so sorry, your stock of the week, NVIDIA. So when Burry talks,
Well,
I'm sure. Are you raising an eyebrow, CJ, when you hear Mr. Burry talk?
so this is the news of the week, and this is very interesting to me. And I have to agree, it's a pretty good point. So now I know that Burry shut down his hedge fund in the past week or two as well. So I know that in the past he's already been getting hit pretty hard on Palantir and Nvidia with those puts. But what he shed some light on last week is really why I think you saw a big shakeup in the market with AI last week, especially some of those GPU like CoreWeave, Nebius, those sort of companies. You saw some shakeup there. Why? Well, it's exactly because of what Michael Burry tweeted. So he tweeted what I had hinted at earlier about depreciation. So, a very interesting fact here for us, Tyler. Back in 2020, the average depreciation estimates on those semiconductors, those GPUs I was talking about for NVIDIA, across all of the major companies, the average depreciation or lifespan of those was about 3 years. So that's something you have to consider. So you're saying if these companies are going to be buying and putting a lot of money into these assets and they're going to be depreciated after 3 years, that's going to change a lot of things on the balance sheet. What we've seen, however, since basically every year since 2020, we have seen balance sheets add 6 months per year to the depreciation levels.
Wow.
So for a GPU that started depreciating at 3 years in 2020 is now upwards of estimates of having a lifespan of 5 to 6 years. And that's exactly what Michael Burry was shedding some light on. So he was saying it's going to be overinflating earnings. It's going to be overinflating some revenues. And what it's going to also do is help keep some of those costs down as well. Because as that depreciation, you lengthen the life of an asset, you're going to be able to get more out of it. And so he's really started to shed some light there, and that's really what we saw last week. So when you look at it, it's a pretty good point. It's a pretty good point that he raised because, in my opinion, and Tyler, we can have some back and forth on this, but if you're talking about NVIDIA, who back in 2020 was creating a new chip about every 2 years, and you were saying that those chips were going to have a lifespan of about 3 years, now NVIDIA is creating a new chip about every year, and you're saying that those chips are going to still be relevant 5 to 6 years down the line. It's you start to raise some red flags maybe because it's like, to me, it's like thinking about like an iPhone 8 versus an iPhone 15, right?
Oh, yeah.
The difference is astronomical. It's just a few years, but the technology is immensely different and immensely better, immensely more efficient. I don't even know if you could run ChatGPT on one of the original iPhones, right? It'd probably
No.
crash immediately. So definitely a very interesting point that he brought to light.
Alrighty, next up, more on the AI. So JPMorgan had some discussion on AI. There's a lot of anxiety with how it's going to impact productivity and labor. So we're seeing productivity's new power tool, essentially, right? So at CNBC's Delivering Alpha conference, JPMorgan Asset and Wealth Management CEO Mary Callahan Erdas delivered a simple message. AI isn't a bubble, it's a runway. And while investors keep flinching at the wild swings in NVIDIA, AMD, and the whole AI trade, Erdas argues that the market still hasn't priced in what AI will do to actual business operations. We're at an early, very early in a transformation that will hit corporate revenues and expenses suddenly, the same way that Hemingway described going bankrupt. Slowly, then all at once. In her view, the real disconnect isn't valuations, it is how little of AI's impact has actually hit company bottom lines. As well, we're seeing Ares Management CEO Michael Arrighetti backing her up, saying AI investment today is tiny, minute, compared to the demand and economic upside ahead. Supply simply can't ramp up fast enough, and the numbers look oversized, only because the opportunity is genuinely that massive. Both leaders also threw some cold water on recession calls. Again, CJ, I know it seems like we hear about a recession call every 6 months, noting 5 years of false alarms. With no downturn in sight, Erdas says credit investors should be leaning in and not hiding, because this part of the cycle is where the smart money quietly loads up. So, CJ, are you coming across that the AI is kind of becoming your power tool?
We'll see, but I have to say that if you look at what they had just said there and some of the things that you went over, the capital expenditures, like I mentioned earlier with NVIDIA, it clearly kind of notes the same thing. So you, again, get into that. Is it over speculation? Is it hype and it'll never come to fruition? Or, like they said, is it the investment is so low today, it seems like a lot until you get to 2030 where it's upwards of $2 trillion in a year. So definitely a good point.
Alrighty. Well, next up here, we got a question for y'all. All you listeners out there, all you followers. So, CJ, 2K tariff checks or cap?
For now, I'm going to call cap.
So, what we want to know from you guys, what should the government do with the projected $300 billion in 2025 tariff revenue? Should they send the checks, stimulate the economy, use it to cut the deficit, invest it through AI infrastructure, defense, or other programs? Or finally, is it just political theater? Nothing meaningful happens. So we really appreciate all of the responses over the past week. So please send us your commentary on this. Send in your vote either through Instagram or a newsletter, or feel free to email us. And next up, we actually have a good amount of response to our last week's poll. Who bears the most responsibility for the government shutdown? So it came to a close, came to a conclusion of the government shutdown, and we're very happy to see we got a good amount of results. So the leading result, 47% had voted Republican Party, and now to kind of provide some contrast to what was the leading answer, we had a follower give a very impassioned response on this. So this follower mentioned that Democrats bear the responsibility. So to start the quote here, I am trying to understand why the Democrats are dying on the Hill about keeping the Affordable Care Act in place. Let's be completely honest, this bill has some major flaws, and it is not keeping healthcare costs down. Why should the government subsidize costs? Doesn't that tell you that the system is broken? From CJ and my look at it, I think there's a degree of responsibility through both areas here. When you take a deep look at it just objectively, right, with this government shutdown, it's pretty clear that the presidential administration gains more power in D.C. albeit a much lower approval rating, and the Democrats were able to gain more popularity in elections, and that's been proven right. They've done quite well in the elections.
Yep, I agree. To that extent, it's a power struggle.
Oh yeah,
exactly as what you just said. Well, Tyler, let me finish this off as always with the quote of the week from none other, I think one of your personal favorites as well.
Oh yeah,
NVIDIA's CEO, Jensen Huang. This short quote, short and simple: smart people focus on the right things.
yeah.
And I think that's what we all have to do, right? Especially in a time where things feel uncertain, just focus on the right things. So as always, we appreciate everyone watching and tuning in for this week's episode of the Weekly Sift Stack, and we look forward to catching you all next week.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal. Any forward-looking statements or expectations regarding company earnings are based on publicly available analyst estimates and are not predictions or guarantees of future performance.